Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we will be discussing what's happening with the oil prices. Crude oil, which is sold by the barrel in the futures market, where buyers take delivery on a monthly basis, reached a peak of $65 per barrel just a few weeks ago. The May contract, which expires today, the 21st of April 2020, had been hovering around the $20 per barrel level yesterday for one of the producers, West Texas International or WTI. It became increasingly apparent that buyers for this contract were hard to come by because of the lack of storage facilities, and when the Chicago Mercantile Exchange, or the CME, issued a warning statement yesterday that it was possible for oil prices to go into the negative territory, it sent a shock through the oil markets. While producers still remained extremely eager to sell, buyers were left standing on the sidelines, and with just hours remaining until the May contract expired, panic selling set in. We can see this on the graph. The price of a barrel of WTI fell through the zero into the minus territory, and with this happened for only the first time in history of the crude oil market. We can also see on the chart that price did recover some upside just to over $1 per barrel, but where it currently hovers slightly underneath the zero, around $2 per barrel at the moment. This price action in crude oil is unprecedented, and as mentioned previously, has never happened before. So what exactly is it going on, and what does it tell us about the oil and the financial markets in general? Firstly, we need to take a step back. Just a few short weeks ago, the world was hit by the COVID-19 pandemic. People all over the world remain in lockdown, businesses are closed, the airline industry is almost flatlined, cars are off the road because nobody is going anywhere, and every one of these sectors uses the byproducts of oil in the form of petrol, diesel, gasoline, jet fuel, cooking oils, lubricants, plastics, etc. Springtime has hit the West, and with the warmer weather we need less heating oil. An old adage springs to mind and has never been more appropriate: supply and demand. We have too much supply and too little demand. I think it's safe to say that we just don't need oil right now. Storage facilities, including Cushing in Oklahoma in the United States, are almost at 80% capacity of barrels of oil. These are only trickling out to refineries, which are also busting to overflow with the byproducts that they have produced, including petrol and diesel. All the time in big oil-producing countries such as Saudi Arabia and Russia, the USA and others keep pumping out oil. They're doing this in defiance of nations asking them to ease production, and whereby the governing body OPEC seems not to have enough clout to force countries such as Russia to do so. However, when oil prices go into negative territory, which many of us have never even considered before, a sudden realization occurs that producers of oil, which falls into the negative pricing during a futures contract, are forced to pay buyers to take oil off their hands at market rate. This will be extremely painful for oil producers, who are producing a product which they cannot store because of a lack of storage facilities, and where they are hiring at great expense barges and cargo ships and huge tankers, many of which are languishing in ports and offshore while waiting to go into ports to be offloaded. This comes at a further expense to the producers. Surely now the writing's on the wall, and the longer the pandemic goes on, the less oil we are going to need, and therefore we should expect production to fall even further. Is there an underlying message here? Well, yes. This kind of unprecedented crash in a major financial sector, albeit a blip, will send out a warning signal to investors that the financial markets remain extremely unstable during the virus pandemic, and that the longer this goes on, we should expect volatility to spill over into the markets such as stocks, currencies, and especially where those countries are producers and exporters of oil, such as the United States, Canada, Russia, and Saudi Arabia. And of course, markets will be keeping a close eye on future oil contract expiries. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.